So we already know that the first quarter of any year for vehicles is not the greatest. January, February, March are not the greatest months when it comes to vehicle deliveries. And Tesla is not immune to that. Usually it's around the same numbers as it was in Q4. But it looks like this quarter, quarter one of 2024, is gonna be lower than Q4 of 2023, and not just by a little bit, maybe by a whole lot. There's a lot of things that went down in the past couple of months, couple of weeks that wasn't expected for Tesla's gigafactories, and it's definitely going to bring down the production numbers and deliveries, which could result in bringing down the stock price, which right now I think is in the 170s, 180s. I don't think we've bottomed. I think we have more to go, and I don't think Tesla stock is done crashing yet for this year at least. But this is the mega short term, and I'm going to show you guys what I mean with the production number, delivery numbers for pretty much this whole Q1 and the stock price of this quarter and the rest of the quarter of this year as well. And you guys will see what I'm talking about. So if you guys are ready, man, smash that like button and hit subscribe if you haven't already. Let's go. So here's my simple daily production and delivery chart for Shanghai, Fremont, for all gigafactories in the first quarter of 2024, January, February, and March. So let's get down. Let's start Shanghai. We already got the delivery numbers for January, which was a little bit over 71,000. In February, just recently, we got over 60,000, which if you guys recalled in my previous video where I predict these things, I had production around 63,000 at a 90% delivery rate. That's about 61,000 deliveries. So not bad, Pejjy. Not bad. That was actually pretty darn good. But March, I think March is going to be a monstrous, I think a record for Shanghai, because that thing is on full capacity, pumping out 3,000 vehicles a flippin' day, which is flippin' insane. March, there's also no days off in March, so we do 3,000 multiplied by 31. That's about 93,000 vehicles in production, which is insane. As you guys can see, delivered is only for January and February for Shanghai, because we can't mix up this with production because it's going to give us a whole different number. And on the side here, 93,000 because of March as well. For Fremont, I left that unchanged compared to the last video I made. These are the numbers, around almost just below 150,000 vehicles being produced. For Berlin, however, because Berlin, man, that thing's going through a whole lot of drama. Just today, that we heard that someone tried to bomb the place. I mean, that's just crazy. I mean, insane. I mean, if it's environmentalists who are doing this, I mean, it just doesn't make any sense. You're an environmentalist, and something that's good for the environment, which is electric vehicles, because it's not based on fossil fuels and pollution, right? You're trying to stop that by cutting off their power and then potentially bombing it. Like, this is very fishy. And if you guys are following me on X, I've had my thoughts on this. It's fishy. It looks like there's some big money behind this to do such a thing. I mean, that's just, why would you do such a thing? It's just ridiculous. But we'll get to that. For January, I think they did about 600 vehicle productions every single day around there for 27 days. That comes up about over 16,000 vehicles in production. Now, mind you guys, Berlin has capacity to do 6,000 weekly in car productions, but I don't think they're gonna do that in February or March, because in February alone, we had like 2 weeks of closed production because of the Red Sea incident. So it's from January 29th. So that's what it was. That's why we have 27 days in January. And in February, only 18 days of production. And I gave it 700 vehicles. I think that's being very aggressive. I think maybe half of that would make sense. But we'll take, I guess this would be the most bullish scenario right now. And we'll just say 440 or 450 going to be the bearish scenario. But let's see what we get here. So we get around almost 13,000 vehicles in production, which I doubted. Berlin did produce that in February. And in March, we have to give it 1 day off as well, because they just stopped production because of all the shenanigans that happened in Berlin with the bombing and the power cuttage. Freaking drama. Again, with 700 vehicles being produced daily with 30 days, that's 21,000 vehicles being produced, which this is too high in my opinion. But again, this is the bullish case. This is the bullish case. Below 50,000 vehicles was being produced in Berlin. I don't think that was the number. I think it's probably close to 35,000. But we'll see what the numbers will be when it comes out the first week of March, or the first 3 days of April, not March, of April. Texas is a bit more stable. We didn't have any cuts or anything like that. For January, 650 vehicles being produced daily for 28 days because they had 2-3 days off. Over 18,000 vehicles being produced. February, 675 vehicles being produced daily. Just below 19,000 vehicles being produced. Cybertruck is ramping nicely in Texas. It's actually getting faster and faster, which is a sheesh flipping moment. In March, 700 vehicles, 30 days there, because they have a day off in March as well. 21,000 vehicles being produced. This number I can get behind. Below 60,000 in vehicle production, I can get behind that. Total production, 350,000 vehicles. I'm going to give that a 98% delivery rate. That's about 343,490 vehicles. Slap on January and February from Shanghai delivery report. That's 475,302 deliveries. The bull case, which is pretty low compared to Q4, well, lower than Q4, but this is the bull case. I do think 450, 460 would make sense around there, but this is the bull case for just a little over 475,000 vehicles. Let's go see what the stock price would be with this, and then we'll bring the numbers down and all that kind of stuff. So smash that like button, man, because I know it ain't smash, man. Come on. So here's the stock price prediction chart. If you guys are a regular viewer, this is not a surprise at all. This is nothing new. And if you're also a Patreon member, you guys have access to this chart as well. You guys can check out over here. The only thing that I increased here compared to last time was the average selling price from 42.25 to 43. Because if we take a look at the price action with every single model for Tesla, they've either maintained it or they've increased it a little bit thanks to the Model 3. But I'm also adding here some of the Cybertruck high prices as well, because that's like that's over 100K per each Cybertruck being sold, and it looks like they're selling close to thousands now. So I gotta add that in, and I think that brings the average selling price even higher to 43,000. That's the only thing that has been changed. Everything stays the same. Energy, I think 1.7 billion, which is a record, and over 400 million in profit, which is also a record. Nonetheless, let's go ahead and put this in. I think Wall Street analysts are expecting around 63 cents, if I'm not mistaken. I think that's the last time I checked it was 63 cents. So let's put 475,302 vehicles delivered, and bam, look at all these numbers come together. I flippin' love it. So we get operating margin of 8.3%, which is really good. Gap of 18.2%, which is also really good. This is going to signal that Tesla has bottomed officially. We get a revenue of over $25 billion. Net income gap of 2.1 billion, non-gap of 2.6. We get 60 cents here for gap, and we're supposed to beat 63 cents. So we did miss here as well. And if this is the case, we can see more triggering down with the stock going lower and lower around the 140s, 150s. Well, 150s is where I'm thinking the bottom is really, but we'll get to the stock price in just a second. But a miss is a miss, despite how good the numbers are. I mean, this clearly tells you that Tesla has bottomed in margins, in vehicle gross profits, and it's on an upward trajectory from here. And it looks like Tesla can gather another $1 billion in cash on hand here from this quarter as well, which is also a sheesh moment. Now, the stock price, something that everybody wants to know, including me, because I am buying this dip. If you guys all follow me on X, I'm buying this dip. I don't care what anyone says, I'm buying this dip. So right now the PE is around what, 42, 41, let's say 40. So if you give it the same PE as of what it is right now, that's about a stock price of 170 bucks per share. So right off the bat is telling you that if we want to give it the same PE as what it is now, it's going to go down to 170. To match it to be around 200, we would need a PE of 47. Will that happen? Depends on future sentiment and guidance at that time. So we'll see what will happen. 40 PE, 170. If there is a recession, if there's more negative sentiment, if there's more bad news coming for Tesla, this can get dropped down to 149, which I think is the bottom in my opinion. I think they keep saying there's a gap of 144. I don't follow these technical stuff. That would mean a PE of maybe 34 around there. That could also be the bottom, no idea. Some are saying as low as 69. Guys, as low as 69, that's a 16 PE. Does that make sense to you? It doesn't for me, but you know, the stock market can stay irrational longer than you can stay solvent. So anything could happen. But a 16 PE for a company like Tesla, it's kind of laughable at that point. 100 would be around a 23 PE, around there. But again, I don't think the lowest 34 PE of 145, I think that would make sense until there's some good news coming in through that. And again, guys, this is between April to July 20th, because that's when we get the quarter coming out in April 21st. But I'm going to say 40 PE at this case. Now, we said 475,000 vehicle delivery is the best case scenario. The worst case scenario could be as like 450, could even go as low as 430, 440. Troy and James Cat on X are predicting between 430 and 440. So let's go 440. All right, let's just go there. Look at that. That's just, forget the stock price. Look at the operating margin, 7.8%. That means operating margin has not bottomed. Probably has bottomed in Q1, because if we didn't have any shutdowns for Berlin, we could easily be around the 470s, 480s, no problem. But a 7.8% in operating margin could scare a lot of investors away, even though in Q2, we're going to see a massive roar in production and deliveries. Because if there's not any more bombing is going to happen in any gigafactory, I'm sure we should be okay in sometime in Q2. And if there is interest rate cuts, which I don't think there will be, that's more going to be in Q3, Q4, then even more bullish news for Tesla. But for now, the negative sentiment is very high and heavy, and it looks like this could be the case if they do 440. All they would need, guys, is to deliver 460,000 vehicles or 465,000 vehicles to reach that 8.2%, to maintain it, to say that they have bottomed. But can they do it? Let's see. I'm just going to keep it at 440 at the worst case scenario. And again, a 40p of 168. If you go back down to a 34p, that's 142, which is kind of perfectly aligned with that gap that everyone keeps talking about, which is insane. And again, 16 PE would be $67 per share, by the way. $200 billion market cap, which is the same as Toyota's, which is a big mistake to compare Toyota with Tesla, because Tesla's doing so many other things like energy and so many other, interesting innovations and services and products that Toyota's not doing, full self-driving, but give it the same valuation as Toyota. If this happens, guys, I may have to sell that camera. I'll be honest. I may have to sell that camera just to buy more shares, because that's just ridiculous. That's all I'm going to say. But again, I'm going to go back to 40 PE, 168. Let's go to 35 PE around there, the lowest it can get, right? 147. I'm just going to say that. In Q2, I'm going to be a bit more optimistic and say 525,000 vehicle deliveries, which would be an absolute sheesh moment. It really would be. And if you put that number in, we get an operating margin of 8.7%. Vehicle gross profits around 17%. 43,000 per vehicle sales. We have total GAAP gross margin going down a little bit, but that's not much of a big deal because we have energy growing pretty nice to 1.9. Would that be the case? I'm not too sure. Q2 looks like the Shanghai mega pack factory is going to come online, which would be flipping awesome, which would really help, even though it'll burn some cash for the first few units that they make, the first few hundreds, until they can scale. That is going to start printing cash like how Lathrop is. Nonetheless, 8.7, we get almost $28 billion in revenue, a little over 2.4 billion in net income GAAP, and almost 3 billion in non-GAAP. Now, would this happen? That would be a sheesh moment if that actually does happen. That would mean a 69 EPS GAAP, which is flipping interesting. And if we give that also like around a 40 PE, 160, 35 PE, that's 140. It does go lower because the EPS is getting lower. So I don't think we're going to see a PE that low. To maintain 35 PE, we probably would need around a 37 PE to do that. So I'm going to say around a 40 PE would make sense in that case. And this is why I keep saying, guys, that there's no rush to buy Tesla stock. Only when the market panics, when it drops 10, 12, 15, 20% in a day, that's when you want to kind of panic buy a little bit. Not financial advice, that's what I'm doing. But there's really no rush. If you want to time the market, there's no point of doing that. But if this what happens, a 40 PE, 160, I can see that happening sometime in Q2. If there happens to be some interest rate cuts, I can probably see this going high up as 50 PE, around $200 per share. But I'm taking the worst case scenario and I'm saying a 40 PE or a stock price of 160 between July 20th and October 20. So let's see what happens then. In Q3 of 2024, 550,000 vehicles being delivered, 9.1% operating margin, which is an absolutely a sheesh moment. Total GAAP gross margin of 18.5%, vehicle gross profits of 17.5%. I am also increasing that as well. We get a total revenue of almost reaching $30 billion, which is insane. Don't forget energy, guys, 2.5 billion in revenue and 550 million in profits. So let's see if this will happen. I know it's very lumpy, but Q3, Megapack Shanghai is open. So this will definitely help as well. We have 2.7 billion in GAAP and over 3.2 billion in non-GAAP. That is an EPS gap of 77 cents. See, this is what we need to see, guys. An uptrend of EPS, an uptrend in operating margin, an uptrend in total GAAP gross margin, and an uptrend of vehicle gross profits. This is what we need to see the stock go higher. And I can see a 50 PE in this case, which would be around $211 per share. If there is interest rate cuts, 60 PE of 254, I can see that around there, but keeping things conservative. In Q4, 575,000 vehicles being delivered. Average selling price got to tick a little bit higher, and bam, look at that. 9.2% operating margin, gross profits, total GAAP gross margin of 18.7%, vehicle gross profits of 17.8%. You can see energy reaching 3 billion. Now again, will this actually happen? again, it is a lumpy business for now, but Mega Pack Factory Shanghai is rampant, so I wouldn't bet against that. We get over almost reaching $32 billion in revenue. Net income gap almost $3 billion, and net income non-GAAP of almost $3.5 billion. We get 83 GAAP EPS. Now you guys can see the EPS on an annualized basis, fiscal basis, has gone down to 2.8%. Now we could see a surprise even in Q1, just like how we saw in Q4 with the tax benefits and all that kind of stuff. Maybe we can see it here. But in Q1, however, we may see Tesla sell some Bitcoin just for it to be a beat. Let's see. I'm not gonna bet on that. Obviously, I'm not adding it here anyways. But in Q4, they could pull something out and this could be higher. But if they don't, 2.8 EPS non-GAAP on a fiscal year is the correct one. If you go back to Q3, Q2, and Q1, they are counting in the Q4 tax benefits. That's why the PE is low. So if you want to justify this and be correct, a 75 PE would match a 50 PE in Q3, which would be around $210 per share. In January 2025 and all the way till April of 2025, I do expect some interest rate cuts. I really do expect that. And I can see it go as high as 100 PE. And we're only 9 months away from the compact car coming out. The Cybertruck has ramped. So I think the sentiment will be a whole lot better then. So I think 100 P of $280 per share does make sense. Almost nearing $1 trillion. I know it's really hard to see that right now. My price target in 2023 was 260 while the stock was about 100. And that was also hard to see. So let's see what's going to happen. My price target for this year is $350 per share. That is a PE of 125. Right on. Will this happen? That's my price target, guys. That's my price target for this year. Let's see what will happen. I'm pretty confident about that something will happen in Q3, Q4, that we will see an uptrend to the stock, whether it's interest rate cuts or something else. But 100 PE, I do see this happening by end of this year because it's just so many things are going to happen from now till then. Could be worse, could be bad, but I am optimistic in here that by Q3, Q4, we may see some interest rate cuts and bullish sentiment will start again for whatever reason it is. And the Tesla stock with their news, it comes in waves. Bad news and good news, bad news and good news. And when the bad news hit, it's bad. And when the good news hit, it's good. That follows with the stock as well. So how low could Tesla stock go? 147, 140s is the lowest I can see it. 150 is where I'm betting on, but we could go down as 140 or 147. That would be a P of 35, which is, silly. If it goes anything lower than that, not pricing in anything at that point. So that's why I'm going to be going all in Tesla. I mean, I am all in, but I'm just going to buy more shares. It's as simple as that. And you guys can follow me on X to see my trades because I do make it public there. And there you guys have it. Now we'll obviously review this once we actually have the full delivery numbers for production and deliveries, meaning deliveries, when it comes out in April 3rd or April 2nd, as it usually does. We'll definitely come back and review and see what it could be around there. But it looks like investors are pricing in that Q1's not gonna be a really good quarter. So that's why the stock has been selling off like crazy while everything else has been going up. And probably why it's not done crashing yet, but we'll see. We'll see. Again, 150 is my floor, 140 is the lowest, but 150 is my floor. Tesla's printing way too much cash for it to be trading down that low, and the future is flipping bright. The fundamental is just flipping bright. It's hard to ignore. But again, guys, this is all short-term, this outlook. If we're a long-term investor, we don't care about this quarter, next quarter, or the quarter after that. We're a long-term investor. Here's my 2030 stock price prediction. I may have to revise it, but it gives you a good idea that 2030, if you're a long-term investor, 2030 should be the minimum, but it shows you what the stock price would be if we just relax and just look a bit further, not 1 quarter, 2 quarters, but 2, 3, 4 years down the line, you'll realize that, wow, I probably bought the dip for Tesla stock, which you guys can get this shirt over here. If y'all want to support me, subscribe, and I shall see you guys in the next video. See ya.